In this video, I'm going to be showing you one of the best London session trading strategies to use to trade during the London session, and it's going to be called the London patterns. So I'm going to be showing you how this works. So make sure you pay close attention, watch this video to the end, and let's get started. So what exactly are the London patterns? There are mainly three London patterns, but first of all, the thing that you need to know is that these patterns repeat themselves every single week. You're gonna, once I'm done showing you the patterns, you're gonna notice on the chart when you go and backtest it or try to trade it, you're gonna see that it shows up almost every week. You're gonna see it every week, right? And your job as a trader is to train your eyes to spot them, right? So I'm gonna be showing you the patterns, and then your job is to train your eyes to spot those patterns. So basically, what we're doing here is pattern recognition in order to create a consistent system of consistently profitable edge. You need something that repeats itself on a weekly basis or daily basis or monthly basis. All right, that's going to be your trading strategy, something that repeats itself over and over again that you can spot consistently over and over again, and then you make money from that one pattern or two patterns or three patterns. All right. And also one thing to also note about the London patterns is that you can also trade them during New York session, because sometimes it's going to extend during the entry is going to extend to the New York session, right? But the pattern starts forming at London session. That's why it's called a London pattern. But sometimes you might see an entry or you might see it during New York session. Just a side note, right? So what exactly are the London patterns? There are mainly three London patterns. There's type 1 London pattern, type 1 London pattern, there's type 2, and there is type 3. So there are three main London patterns. And in this video, I'm going to be breaking down just type 1. And then in the next video, I'm going to be breaking down type 2. And the next video after that, I'm going to be breaking down type 3 and also showing you some examples, right? So make sure to like the video, subscribe, turn on your notifications so you don't miss when I drop type 2 and type 3. So let's get into type 1. What exactly is the type 1 pattern? What does it look like? How does it work? So the type 1 London pattern is basically your typical AMD pattern. If you're not familiar with AMD basically means accumulation, manipulation, distribution. So AMD, whenever you hear AMD trading strategy or trading patterns, it's called accumulation, forgive my spelling, accumulation, manipulation, and distribution. This is what it, this is the full word for AMD, right? And this is what it looks like. So the accumulation is basically three phases. This is the accumulation phase, the manipulation phase, and the distribution phase. So what does it look like? The accumulation phase is basically the sideways consolidation that happens during Asian session. So, we have three sessions of the market. We have Asian session, we have London session, and we have the New York session. The accumulation usually happens during Asian session. So you're gonna see market makers are gonna be accumulating contracts inside this place. It's called accumulation because what they're doing is they're accumulating contracts, they're accumulating orders. So people are going to be buying and selling inside this range, right? So you're going to have buyers and sellers selling at this resistance here, buyers buying at the support level down here. And that's how they create the order. So they are traders mostly on lower time frames, like the 5 minutes, 3 minutes, 1 minute, buying and selling inside this range. So that's going to create liquidity. It's going to create stop losses above and below this range, which gets exploited during the New York session, during the London session. That's where you get manipulation, because they're going to have to manipulate the orders in order to favor their own books, the book of the market maker. So if market makers want to go down for the day, what they're going to do is, since they have orders at the top here and they have orders at the bottom here, and let's say the orders, the amount of the percentage of people selling, maybe it's at an equilibrium, right? Let's say it's at 50% of buyers and 50% of sellers. Let's say, for example, all right, you have 50% of people buying and 50% of people selling. All right, so market makers have to offset this equilibrium. They have to change it. All right, so in order for market makers to buy, they have to make you sell. And in order for market makers to sell, they have to make you buy, because basically what is happening here in the market is they are buying from you. So you sell, they buy from you, right? they sell to you, you buy from them, right? That's basically how it works. So in order for them to make money, they have to get you to do one certain action and then go against your action. So basically, if they want to sell for that day, what they're gonna do is you're gonna have to offset this equilibrium in two ways. One move does two things. So they're gonna first of all break out during normal session. You're gonna have an aggressive breakout to the upside, for example. So now market makers want to go down, so they're gonna break upward first. That's gonna be an induction, inducing you to take buy. So what this does, it does two things. This one move does two things. It kills two birds with one stone, basically. So what it does is the breakouts hits the stop losses of the people that were selling initially. So basically, because it has hit the stop loss of people selling, they're taking out the sellers. So it's not going to be 50-50 anymore. Now it's going to be, let's say it's going to be 30% selling, and then this would be about 70% buying. All right. So now they've offset this number, this equilibrium. Not only that, this hit the stop loss of people selling, and also breakout traders are going to be taking the breakouts outside this range. So they're going to be people taking breakouts. You know how breakout traders take breakouts here, breakout of the London session. I think there's a strategy on YouTube that if you search on it, you're going to see it. It's very popular. It's called the London breakout strategy. Maybe you were even searching that when you even found this video. Who knows? It's called the London breakout strategy. Basically, they wait for accumulation, and then when the London session comes up as a London breakout, they wait for a breakout and they enter on the breakouts, right? That's the psychology that happens here. So people are going to be taking these breakouts, right? Which does what? It also increases the numbers of buyers. So now let's say we're going to have, let's say, 90% of people buying, and then we have 10% of people selling, right? So now market makers have shaken the equilibrium. They have disrupted this equilibrium. Now we have 10% of people selling. So we have more buyers than sellers, right? Our market makers want to sell. Remember, market makers want to sell. So if they want to sell, they're going to sell to the buyer. So they're gonna sell to this 90% that are buying. So what happens here is, well, market makers have enough liquidity to make their move. They're going to reverse the trend. And what they usually do is they form an M formation at this high. So this is gonna be the high of the day. This is gonna be the highest point for the day. So remember, before the breakout, this was the high of the day, this high of Asian session, and this was the low of the day, the low of Asian session. So what happens is the breakout extends the high, extends it all the way up. So now the high of the day is no longer this Asian session range, it's now this point. So they're gonna pull back, and this is gonna form the high of the day right here. This is gonna be the high of the day, which is gonna be abbreviated to HOD, high of the day. Right, this is going to be the high of the day. Now, the high of the day is very, very important because that's the strongest resistance level on the market. This is where once market makers are done with the liquidity they have, they're not going to break above this area. They are not going to go above here unless they want to just take out extra liquidity to move. Right, and if they're going to do that, they're just going to spike it and then come back in. Right, so market makers are going to pull back and they're going to do as if they want to go back up there. They're going to attempt to go back to this high. They're going to attempt to go back to the high, sometimes near, come close to the high and not break the high, come close to the high and then reject off of there. That's going to give you your M formation, right? The reason why this happens is to induce more people. That's if they need enough liquidity. So induce more people because more people are going to think, okay, we have a low here, we have a high, we have a higher low, we have a higher high, and we have a higher low. So you're going to be expecting the higher high. So more people are going to be added into this place. More people are going to be taking buys in here. Maybe they're going to use a moving average and say, oh, price has bounced off of the moving average, or they're going to draw a support level. Oh, this is a support level in this area. So that means the market is going to go up. No. So it's going to bounce off of this. It's going to attempt to go back to that high, fail to break the high, come back down. That's going to give you your M formation, your double bottom, sorry, your double top. All right, and from that point, price is going to reverse all the way back down, and then do basically the same pattern here. Do it here. It's not going to reverse fully. It's just going to pull back and then end the day in consolidation, and then they repeat the same cycle the next day. All right. So this is the type 1 London pattern. This is type 1. This is type 1. Let me type this thing well. All right, so this is type 1 London pattern. This happens during the London session. So this entire move happens during London session. Sometimes it might extend into New York session where you're gonna get the first leg. You're gonna get the first leg during London session and the second leg in the New York session. Right. So you need to understand that they're gonna give you different variations of it. Sometimes they're gonna vary the timings. Right. So if it happens during New York session and you can trade New York session wherever you live, you should be able to enter this trade. If it shows during London session, you can enter the trade. All right. This is the type 1 pattern. Now let me show you some examples of this. This is the first example that I'm going to be showing you here. Now you can see a very clear pattern here that showed up. This is actually a trade that showed up on GBJPY not too long ago. This was last week. All right, the time of recording this video is about the 5th of May. All right, so if you look down here, you can see this is, I think this is 30th of April. That was last week. You can see here we have the Asian session consolidation, which is the accumulation phase. Remember, they are accumulating buys and sells. That people are going to be buying all the way in here and selling all the way up here, right? So it's accumulating orders inside this range. This is the Asian session consolidation. The price breaks to the upside, hitting out the stop losses of the people that are selling, also inducing more people to take buys. What happens? This is the high of the day. This is the highest point of the day. Remember, I told you they're not going to go above this high. So what happens is price goes to this high, comes back down, attempts to go back there. Now people are going to be seeing this as a pullback to continue up. So more people are going to be adding buys in here, taking buys in here. So this entire area is market makers just creating liquidity, trapping traders, inside this range. And then once they are done, what happens? You can see how they shift away from there. There's a specific candle that happens once this thing forms. It's called the shift candle. The main purpose of that candle is to shift away from the trap zone. So this is a trapped zone that market makers don't want to go back to, right? So they shift away from there with one candle, and then from that point they are gone. They're not coming back till they have new targets, right? So we have the high of the day here. Price comes back down, goes back. Now they did a little stop hunt, little liquidity sweep at the high here, and then reverse from that area. Right. So this is your M formation. This is your AMD. This is your type 1 London pattern. You're gonna see a clear breakout outside the Asian range. Here's another beautiful example. This happened 3 days in a row. This was also last week. This was on a different currency pair. This was CAD CHF. So you can see we have an M formation here after breaking out of the Asian range, right? They did not break this high. We have an M formation here also outside the Asian range. Again, they did not break this high. We have another M formation here outside the Asian range. Again, they did not break this high. If they break this high, the trade becomes invalid unless they enter back in, right? So they're going to give you different variations. So this is the pattern. M formation, you sell all the way up here. M formation, you sell. M formation, you sell, right? Repeatable pattern that you can spot easily and repeat on a consistent basis every week. That's what I'm showing you here. Here's another beautiful example, 2 days in a row. We have W formation at this low here. We have Asian session consolidation. Price breaks to the downside, gives you a clear W formation, taking this back up. Most people are going to be looking at this as rally based drop or whatever, lower high, and then they're going to be looking for sales in here, not understanding that this is going back up. We have the next day, we have the same pattern, Asian session consolidation, break to the upside, M formation. Again, notice they did not break this high. Here, they did not break this low. That's very important, right? They repeat the same pattern here, W formation here, to end the day in consolidation. The next example here, the same thing. We have Asian session consolidation. We have a clear breakout to the upside. We have an M formation here, right? You can see the M formation clear as day. This is the high. They did not break the high. They did not break the high at all. Came back as if they want to go back to that high and then reverse all the way back down. We have another beautiful example here. We have Asian session consolidation. First of all, broke to the upside, gave you a tiny M, came all the way back down, gave you a very nice W formation. Now, this is a very good example where they did a liquidity sweep, right? So they swept liquidity below this low. There's a reason why they threw this week below this low is to take out the liquidity. Anyone that was trying to catch early buys in here got got taken out. Once they did this move, they went away from there. You can see price did not come back to that area anymore. All right. Now you're gonna notice you also have a shift candle. This is the candle that shifts out of that area, and then price doesn't come back to that area anymore. If you held this to the next day, so this was a Friday, held this overnight to Monday over the weekends, you can see price continued all the way up to this point up here. All right, so this is a very repeatable pattern that you can trade consistently. This is called the Type 1 London pattern, and this is what I teach. If you go through my videos on YouTube, you're gonna see this is exactly what I teach every single time. Here's another bit of example. We have Asian session consolidation, right? Price breaks to the downside, gives you a W formation. You can see price did not break this low. They formed the low, started to consolidate at that low, give you a W formation. You enter on the buy, taking this back up, straight up green candles or blue candles, bullish candles, and a red candle, right? Type 1 London pattern. Now, I'm doing a 12-week mentorship where I'm going to be teaching you live, right? So every week for 12 weeks, I'm going to be teaching you live, guiding you on how to use this pattern, this type 1 London pattern, and also type 2 and type 3, which I'm going to be explaining in the next videos. I'm going to be showing you how to trade these patterns, how to use this concept, because this is the concept, right? What I just showed you is a concept. You need to turn this concept into a strategy, right? If you trade this blindly, you're gonna hurt yourself. You're gonna blow your account. You need to trade this with a system. You need to create an edge using these patterns, and that's what I'm gonna be showing you how to do in the 12-week mentorship program. The link is gonna be in the description below. We're gonna be launching 12th of May. We haven't launched yet. We have only 1 week to go, and then we're gonna be launching. You can join in early. Click the link in the description below. Make sure you don't miss this 12-week mentorship program. This is the first time I'm doing a group mentorship. This is the first time. So make sure to join below, and I'll see you guys inside.